Okay, we are back with this very interesting topic, which is bank loan. You know, bank loan. The last bank loan topic I did was like, I think like a year or plus ago, and I got like a few thousand views. You know, so I realized that bank loan is like, you know, it's the in topic. I think that the other topic that got many views is like property scam. Okay, so basically bank loan. So what we're going to talk about today, I realized that there's a few things that people do not understand about bank loan. Okay, so I'm going to talk about, because the old one, right, was did like a few years ago, so some things may be different now. Okay, so I'm going to share with you now. Okay, so bank loan, everybody takes a bank loan. Do you know HDB? When you buy a HDB, you take a HDB loan and a bank loan, right? HDB loan is like 2.6 or 2.8%. It's like higher than a bank loan interest. Bank loan interest now for fixed, I think first year 1.89, then later go to 2 point something, you know. Even variable moving rate, floating rate is about 2 point something. So they are always tag onto some fixed deposit rate, tag onto some SIBOR rate, interbank rates and whatsoever lah. Okay, so but this is very complicated. We do as a commoner, as a public, we don't want to understand all these things. We just want to know what is the rates that we're getting and some of the crucial points in a letter of offer that we need to take note. Okay, so the first thing we need to ask ourselves, what rates are we getting, and what are the fixed amount or the promotion amount last. Okay, so you take a bank loan, normally they will tell you, let's say first year what, second year what, then you realize the third, fourth or continuous year it will start to increase. So this one we need to take note. And normally, let's say they say 2 years you get a very good rate, or 3 years you get a very good rate. This is considered like lock-in period. So in this lock-in period, right, you cannot do like refinancing or repricing. There's a penalty. But you realize that this lock-in period is very crucial, because once your lock-in period ends, then the pricing, the rates will fly, you know. Then this is where people do not understand. You know what I'm going to tell you today, right, is like 99 of the people do not know about this. So when the rate starts to fly, you need to go and call the bank. What? Call the bank for what? Okay, so now you have to check whether your letter of offer contract inside there's put like one-time free conversion or one-time free repricing. Okay, if there's no one-time free repricing, I know that repricing costs about like $300 or $500. So you need to, on the third year, let's say the lock-in period is gone, right? Normally the fourth, fifth year onwards, the rate starts to fly to like 3, 4, 5%, you know. So you need to call the bank. Okay, so when we call the bank, there's always two school of thought. The public always tell me, hey, have you refinanced? Hey, have you refinanced? Hey, come on, refinance means you need to change bank. Okay, when you change bank, there's more admin fee and more 有的没有的 money to be paid. Okay, so you do not need to change bank. You know, you just need to do a repricing. Okay, repricing means we call the bank to check what is the current promotion rate that the bank can give to us. Then we did do a repricing. So we either get the current rates, let's say, but when you do a repricing, it's like signing another contract law. So you need to do like lock in another 2 years for floating or fixed rate. You don't need to change bank, and the admin fee is definitely lower than you doing a refinancing. People do not share with you repricing, because when they tell you refinancing, they actually earn more money in a sense, like, you know, they get a referral fee, because repricing no referral fee ma. So if you realize that you're out of lock-in period, you can call the bank, ask whether you're entitled to one free repricing or not, or ask the bank whether you can do a repricing. Is the repricing rates better than the rates that is offered to you currently? You know, you do not need to go and do refinancing. Okay, let me please let me just remind you, refinancing means you change to another bank. You do not need to spend the time or the money to change to another bank. Okay, so and I can tell you it's definitely more money lah when you do refinancing. It's definitely more admin fee here and there, penalty here and there. It's definitely more troublesome to do a refinancing. Okay, but many people do not know that they can do a repricing. Okay, so this is one important factor. The second factor is just now what I talked about, is whether you are given the repricing option in your contract. Okay, so you need to check whether there's one free repricing or not, or repricing need to pay money. Okay, so the third thing is many people they do not understand that previously when we get a mortgage loan, right, we need to produce a lot of statements like credit card and everything. Okay, so we need to, like, if let's say we have 6 credit cards, we need to provide like 6 credit card statements. So now the things have changed. Okay, so now when the bankers do their loan approval, they just need to go credit bureau. Credit bureau will tell them how much, what's the amount of money that is on loan or credit card or anything. So they will just use that to calculate. You do not need to produce any credit card statement now. Okay, but this thing, right, is why am I trying to tell you this is because I want you to understand that any loans or any credit card, even if it's an interest-free installment credit card, like for example, you go Courts, you buy a TV, then it's interest-free 6 months, all these things. This will all affect your loan amount. Okay, so this will all affect your loan amount. So if you want to take a mortgage loan, the important thing is you must have a stable income. Okay, stable income. Employed and self-employed is different. Self-employed or any allowance or any special amount of commission, right? The bank only take into account 70% of it. So the bank will haircut 30% and take into 70% of it. If you are employed, then the bank will take into 100% of your income. Okay, so these are some of the important points. Okay, last but not least, I'm going to share one very important point. Wow, suddenly I forget what I want to share. Let me think. Okay, wait. Okay, yeah, correct. I want to talk about this bank loan structure A and B. Okay, I call it structure A and B. Okay, because this is often neglected by a lot of people. Okay, so structure A and B is because today our bank loans is up to 75%. Okay, so we don't get 80% max loan anymore. It's 75%. So this 75%, if provided this is a first mortgage loan, so there's no other loans. There's a first mortgage loan, 75%. Wow, who come? Okay, wait, I'll be back. I'll be back. Okay, sorry. Someone came and delivered something. Okay, so what I'm talking about is today bank loan is 75%. Okay, 75%, then we have a cash down payment 5%. The remaining 20% can be cash or CPF. Okay, so this is the current bank loan structure. Last time is 80%, so it has been tuned to max 75% only. Okay, and loan tenure is up to 65 years old or max 30 years. Okay, but many people have neglected that there's this structure B. Okay, structure B is for customers that want to extend their loan tenure. Okay, meaning that let's say the customer is older, the customer is like 50 years old, so they can only loan up to 15 years. So, but they want to loan like 20 years or 25 years. You know, so when they want to loan longer, their loan tenure will go up to 75 years instead of capped at 65 years old. So their loan tenure, let's say 75 years old. So 75 years old, they get to loan another 10 years. The bank do allow that, but there is a problem with this. Once you increase your loan tenure to 75 years old, your loan amount drop to 55%. Okay, your loan amount drop to 55% instead of 75%. Then your cash down payment, instead of 5%, it increased to 10%. Okay, why am I telling you this? Because if you know about this loan structure A and B, it will actually help you, because some of the older customers, right, they do not need 75% loan. They only need like 50% loan or 40% loan or 45% loan. But if you use the first calculation, right, they may not get this amount of loan. But if you use the second amount of calculation, they may get more loan. You know, they may get 50% loan. But if you use the first calculation, they may only get like 30% loan. So why am I telling you this? Because the bankers do not know what is your plans. The bankers do not know what is the things that you're planning to do. You know, what is your housing plan? What is your action plan? So they won't advise you in terms of this. They may not know that this is needed by you. Okay, so it's important that you get a good consultant lah. You know, I'm not saying that I'm good lah. Okay, no. But anyway, you need to get a good consultant, because the action plan is very important. Okay, so I'm going to keep this bank loan video short, because I know a lot of people love bank loan videos. Okay, and I think the last one I was a bit naggy and everything. So this one I actually sum everything up. Okay, so I'm not going to talk about EC or HDB bank loan, because the EC and HDB bank loan, the loan tenure is different. The HDB if you buy a HDB using bank loan, the loan tenure is I think only 25 years. Then for EC, it's not using 60% TDSR, it's using 30%. So I'm not going to actually complicate you. It's just that basically, if you buy a EC or you buy a HDB loan, right, compared same amount of income, the same person, right, can borrow more money when they buy a private property compared to buying an EC or HDB. Okay, that's it. Okay, so when we talk about EC, we talk about new launch EC, not the resale ones. Okay, so this one I'm not going to talk about it, because there will be one video that especially talk about this. Okay, so if you like my video, hit the subscribe button. There's a bell, you click the bell, ding. Okay, then like the video and share the video with your family members. And thank you very much for watching, and I see you next week. Bye bye.